Alright, Tech Swing Trade here today, and I'm going to show you how to set up an options strategy in Tastyworks where you can have 70 to 80% probability of profit on the trade, and it's relatively simple for beginners. If you're not familiar with options strategies or option contracts, be sure to subscribe to this channel and hit the bell notification. We're going to be doing some live trading on a $100 account where I will show you how to grow a very small brokerage account safely. And Tastyworks is one of the best platforms to do that on. I'll also leave a link below where you can sign up for that. But let's go ahead and we're going to go into the trade here, and I'm just going to go ahead and clear this out. What's nice about this platform is it's very visual, and it does a lot of the math for you as far as probabilities of profit, and it sets up these trades for you automatically. Right here where you see strategies, let's go ahead and go to, right now I'm in the futures, let's go ahead and go to SPY, which is an ETF for the S&P 500. We're going to go ahead and choose that, and I'm going to clear this out. And now on the SPY, what I like to trade is a non-directional strategy because typically this is a pretty reliable stock that doesn't have a lot of volatility, and a very, or I should say, an iron condor is what I like to turn to most often on this, because you have a very good probability of it staying in the range. So this is a non-directional play, and what we're going to do is adjust the width of the strikes here. We're buying a call and buying a put, and we're selling a call and selling a put. Or even better yet said, we're basically buying two credit spreads at different points, one over here and one over here. So depending on how we set this iron condor up, you can see down here it shows us our profitability of profit, which is this pop. And this gray area, or the brown area in the center here, this is the expected move of the underlying. So this is how far the options market is pricing this to move. So I'm going to use these arrows to move this trade in. You can see if we set it right to the probability, then we can set the time. Right here you can see this expiration is set for a day. I'm going to go ahead and go out. Typically, I usually do shorter contracts. I do recommend you go 32 days, but when you're doing a smaller account and you're not really going after those big dollar amounts, I find these shorter periods of time, if you're collecting at 50% of the possible profit, your odds are pretty in your favor here, and you can kind of get that small account growing much quicker than if you're waiting a month or even a half a month on these trades. Usually I try and get in and out of these trades in a week or less, so with high probability of success. So you can see as we come into this brown area, our probability of profit down here is now only 24%, and we're going to go ahead and move these strike prices out. Now we're at 35%, 45%. Now you're going to want to note though is the more you come in here, the less the trade's going to cost and the more you can win. This is going to cost us $24, max loss 24, max profit 76. Now, as we increase our odds, so let's widen this out. We increase our odds to 46%. Now this trade, we could lose 54 for a possible max profit of 46. So as we increase our odds, the trade is going to cost us more, and we're actually going to take in less money as a credit. But a lot of beginners, including myself, are always tempted to move this way in because they're like, oh, look at this, I can make $76 for for a max risk of $24. So it's very tempting, but I can tell you from experience, um, you'll more often than not lose all your money on these trades. You're much better putting up a higher collateral and collecting less. So let's say we move these strikes out to 70% profit of winning, or 72% profit of winning. And you can see we're way outside these strike zones, so chances of us closing this trade in the money are very, very good. As you can see here, the trade is going to cost us $82, and we're going to take in an $18 credit or profit, providing this option stays within this green range right here, which is well outside of this expected move. And this will expire in 11 days. We could even close this halfway through the trade at a 50% profit if we can make it to that point. And we can also increase the quantity of these trades. So depending on the amount of money you're trading with, will kind of depend on how you want to set this trade up. But on a small account, if you're trying to grow a small account, you certainly don't want to be taking huge risk. So I would recommend staying. I mean, you could go a 67% odds on a trade is fairly well still, and you can increase that profit to a $24. These trades are also very easy to manage. If the trade starts to go against you, you can always roll it out to a later date, or you can close it out before you go into a loss. There's a lot of different strategies you can use here. If you're staying above a 60% probability of profit on these trades, chances are you're going to have a pretty good chance of walking away with some extra money. Now also, if you do have, this is a pretty neutral play, you can also set these up to be directional. So say you think the SPY or the S&P 500 is going to go up in the next week, you can just kind of slide this range to the right or to the left. Now you'll see as we go up higher, our probability of profit goes down. But if you have a strong directional opinion, this really doesn't take into account for any kind of those changes. But if we look at our P&L over here, max, I mean, so the trade ends up costing us a little less with a little more upside potential the more we move it directionally. So as you can see there. So let's try and see. Let's move this down to the downside with a 62%. See, we're getting a much better payoff there. $63 risk for a $37 credit. And as you can see, as long as we're still just inside this brown zone, so if you have a directional assumption that SPY is going to go down in the next week, then you can move this in that favor and increase your profit potential and decrease your collateral, and still have a 62% chance of this option paying you in the end. So hope this video was helpful for you guys, and I hope you see the benefits of using Tastyworks. It's just the visual learning for me seemed to help a lot, and I'm sure it will also help a lot of other people out there. You can sign up for this account in the link that I left in the video description, and be sure to subscribe to my channel here for the weekly trade, where I'm going to be trying to grow my Tastyworks account from $100. I will be putting out a live stream of the trades I make. So I will be telling you guys publicly exactly what trades I'm making in order to grow that account. And you will get those live streams provided you hit that bell notification. But till next time, guys, Tech Swing Trade here, signing off.